So we have officially entered the age of alpha. For years, just buying an S&P 500 index fund was just enough to get rich. But as we move into 2026, the game has really changed. With Jerome Powell stepping down as federal chair this May and the inflation rate proving sticking than expected, the easy money from broad index tracking is really slowing down. So today, what I'm going to do, I'm going to be showing you the 4 Fidelity ETFs that I'm using to navigate this financial reset. So we are moving away from the growth at any cost kind of mindset and towards an asset that provide real cash flow and defensive stability. Welcome to Tinker's Mind. This is my channel. If you like what you're saying and you like these tips, please subscribe and click on the notification. So let's dive into this. My first pick is going to be FQAL, and that's the Fidelity Quality Factor ETF. So in a market where analysts expect broad gains to stay in the low single digit, quality is going to be your best friend, to be honest. So FQAL doesn't just buy like the big names. It screens for companies with high free cash flow and stable earnings. So why is this a 2026 reset play? Because it keeps you exposed to all the winners. This ETF has the likes of Nvidia, Microsoft, Apple as the big boys. It also filters out the companies that are drowning in debt. FQAL is a bulletproof call for your portfolio. So the next one on the list is going to be FDVV. That's the Fidelity High Dividend ETF. So now most dividend funds are full of slow sector, like utility sectors, but FDVV is different. It's an hybrid. It captures the massive dividend growth coming from big tech, while paying out a yield of roughly like 3%, so which is pretty good. So as the tech giant transition from pure growth to returning capital to shareholders, FDVV lets you to participate in an upside while getting paid every quarterly, because dividends is usually paid every 3 months, right? So it's a perfect pivot for investors who want income without sacrificing the AI boom, right? So the third Fidelity ETF I want to talk about is going to be the FBND. That's the Fidelity Total Bond ETF. So most people use passive bond funds, right? But in 2026, you're going to need like an active pilot, right? So with the Federal Reserve leadership changing, so in a few months, interest rates are going to be like very volatile, right? So the thing about this fund is that FBND fund, the managers are fishing in the bigger pond, right? They fish more in the bigger pond than the standard index fund, right? They can pivot between government treasuries and high quality corporate debts in real time. It currently offers like a yield cushion of around 4.5%, which is massive safety nets if the stock market goes on the downside, right? So finally, my wild card for 2026 is going to be FDEM. That's the Fidelity Emerging Markets Multi-Factor ETF. So while the US market is trading at a premium, emerging markets like South Korea, Taiwan, and Brazil are trading at a massive discount, often half the price to earning ratio of the S&P 500. So Fidelity analysts expect a depreciation dollar to a major tailwind for emerging market assets this year. So FDEM doesn't just buy everything. It uses a multi-factor screen to avoid the junk and target high momentum companies. It's my top pick for global diversification in 2026. So I'm going to put a description of all the ETF that I've talked about so you can know what the performance is, the expense ratio, and the amount. The 2026 reset is about being strategic, right? Not just being in the market. Which of these four strategies fit into your play? Let me know in the comment below. Don't forget to hit the subscribe button for more deep dive into the thinker's mind, and I will see you on the next one.